Awesome. Awesome, General Boss. Awesome, Joe. Good. All right, everybody. Welcome to Unitybuilders Fx. It's a mentorship program that I run. I just started not too long ago. I'm already looking good. I'm so excited to kind of generally speak to you guys on how I trade. First off, I would like to, hold on just one second. I think somebody had a back. Okay, there you go. Okay, cool. So generally speaking, I am going to show you guys how I trade. And then we can go over some past weekly trades, possible setups for the next week. We can talk about trends, trades missed. This is, I know Joe recommended this. So I'm just mixing a little blend with his stuff. And I would like to offer you guys, you know, special opportunity for what I offer. And because you guys have been talked about pretty, you know, I've heard some great things about you guys. I have a special offer for you guys. The offer ends possibly in the beginning of the next month, but because I know Joe's people and I know Joe really well, I'm the type of guy that just loves to bless people. Forex is about getting your time freedom back. It's not about trying to cap on anybody's capital. It's not trying to take anybody's money. It's really trying to get your time freedom back. And what's interesting and what's most important is me as a mentor, I'm the guy that loves to help people get their freedom back. And I'm one of the guys that tries to help people get to where they want to be without having to worry about like even a monthly payment. So this is the reason why I don't call it an academy. I call it a mentorship program, because a mentorship program is like discipleship. It's like you doing a one-on-one teaching. You have a master that basically teaches his students and you train them how to get better. Academy is more like you're selling courses, you're selling a whole bunch of stuff. And it's just, there's nothing wrong with the academies, but mentorship programs are more like more personal in my opinion. So what I do daily webinars. I give out trade signals. I do daily Zoom meetings. And because people's trading hours are like really different, I try my best to like stick to one session. I usually do New York session and pre New York, but I do wake up at London at times as well. So I am a flexible mentor. So I'm just one of those guys that just loves to make sure my students are getting what they need. Okay. So first off, let's go ahead and start. All right. So if you're just not joining, welcome everybody to Unitybuilders Fx, the mentorship program. And first off, we're going to go over how I like to trade. All right. So if you guys have any issues with your internet, of course, you know, you can feel free to let me know and everything, and that'll be it'd be fine if you have to back out and come back in. I'll be here to admin you back in. All right, so basically in Forex, the most important thing about Forex is you need to understand that Forex should not be a game of impulsiveness. I think it's really important that you as a trader should never take trades based off of the fear of missing out, which we call FOMO, or impulsiveness. So if you feel like you're getting in a trade because you're feeling like, oh man, I'm going to miss this trade. I'm going to possibly, you know, ruin my chances for making money. It's best that you let that trade go, because what tends to happen is we get in the trade based off of impulsiveness, and then we end up paying the price because we got into the mindset of being greedy. We didn't get patient. All of a sudden the market starts coming back on us. We're in an unnecessary drawdown, and you keep moving your stop loss, and all of a sudden you realize the trade is invalid and it stops you out, or you take yourself out. And then the worst things possible is when it does happen that way, you take yourself out and the trade goes in the direction you want it to go. Ladies and gentlemen, we're trying to prevent ourselves from just giving the market our money. Now, does anybody Chat, put in the chat, type a 2. If you trade, hold on for a second. I'll just use this because I need some clear space real quick. If you trade, go ahead and get this out the way. I do not need this. Does anybody trade M's and W's? If you trade M's, say yes, and W's. If you don't trade M's and W's, tap in the chat, say no. And this is not a right or wrong answer. But if you trade M's and W's, does anybody trade M's and W's? Cool, no. All right. Anybody else trade M's and W's? Awesome. Okay, cool. No. All right, cool. So no, I love it. I love this, man. This is going to be a wonderful session. And that's good. You shouldn't trade M's and W's. I'm not saying that nobody can, but I recommend people not to trade M's and W's. And here's the reason why. Because when you trade M's and W's, a lot of times the market will form this M. And even if the M is higher than this high and it comes down here, I noticed that a lot of people like to enter on this high, which they call the stop hunt, and they assume the market maker method is supposed to go in their way. But little do they know, it'll come around this structure, all right, come back and then just wick you out. Okay, and it's the same with the with the W formation. So I'm the type of trader that it doesn't even really matter so much about just the overall trend, because if it was just all about the overall trend, why are people still losing? And that's one thing you got to ask yourself. Why are people still losing even if they're trading with the overall trend? And the reason why they're still losing is because they are not looking at structure. Okay. I trade based off of psychological levels. And we call that market structure. You can call that support and resistance, or you can call it supply and demand. But in this case, I leave the term support and resistance out of it because honestly, anything can be support and resistance. Okay. I do psychological levels. So let's just look at NAS 100 for a second. I trade this pair from time to time. Okay. So let's go ahead. All right. Let's go ahead and just break this down. Let me just take this off. All right. So let's just say you're looking at the market. Okay. You go to the 4-hour time frame and you're sitting here thinking, okay, where is the market currently? Now, what's interesting is usually I look for the trend, right? I'm like, okay, looking for the overall trend. The trend is what? It's up, correct? So more than likely, we're still looking at buys. If you want to even go to the weekly time frame, which I use from time to time as well, you can see that the overall is buys. Okay. Literally you can do whatever you want to make this simple as possible. Anybody selling this pair is crazy. It's buys. Okay. If you really want to get into the scenario of your little trend line strategy, just to say, okay, I'm just looking for a specific trend and where the market is going, it's buys. Okay. You can see clearly the market is respecting these highs and these lows. Okay. It's buys. However, we know we don't always trade like that either. So we just use it as a confirmation of saying, okay, the market on the weekly is buys. Okay. Take note of this. You see nothing over here. Nothing over here is stopping this market from selling. There's no wicks over here, which is telling you that there's buys, 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 buys. This market is giving you the clear indication that the market wants to buy. Okay. We got some more people coming in. Hold on for just 1 second, guys. All right. Put that person in the room. Good. All right. So what we tend to do is, okay, since we know our overall direction, let's go on the 4-hour time frame. All right. All right. So I will go on the 4-hour time frame and I will look for structure. Okay. And I'm sitting here asking myself, guys, what's very powerful is when you ask yourself the question is, where is market structure? Okay, where is market structure? So let's, for example, right here, this is market structure. All right, right here is market structure. Okay, so you really want to simplify everything as much as possible. So the overall goal is to make sure that you are simplifying your trading. You doing all this, trend line, EMAs, pivot points, I use these things, but at the same time, I don't use them. I don't need them. Okay, we can get in pivot points in a second, but you doing all this is confusing your brain. You are clouding your brain from just simply looking at where the market is at. So what I'm teaching you today is just know where the market is at, trade off of that. Trade what the market gives you, because you're not promised the M&W. You're not promised to buy. You're not promised to sell. You're not promised anything in this market. But you are promised where the market's at. You trade what the market gives you. So I'm like, okay, cool. The market is giving me, all right. So the market is giving me these buys. I'm going to 1 hour right quick. I'm sorry. I'm gonna tell you exactly where I bought NAS 100 last week. So I go right here. This is a level of market structure, guys. Okay. This is an area you need to pay attention to. Okay. So I'm like, okay, on the 1 hour, this market structure, I'll go on a 30-minute time frame. Okay. I have to do it like this. Now, at this time, the market was not right here. It was not right here. Okay. It was actually right here. Okay. So let's just pretend that, of course, I don't have replay mode right now, but let's just pretend the market's right here. All right. What you need to take in consideration, if the market comes up, let's just say this is structure. If the market comes up, all right, forms a bullish candle, all right, forms a bullish candle and closes above this structure. Number one, that's your confirmation the market wants to buy. Okay. Now, if the market comes down and closes in structure, that is an invalid trade setup. Because it closed back in its range, you do not want to look to buy that pair. Okay. A lot of people say buy off the retest, buy off the sell candle. No, do not do that. I'm going to tell you how to buy. Okay. What you want to do is you want to wait. Let's just say it created this wick. Okay. What you want to do is you want to wait for the market to come back down. Okay. Let's just say it closed. Once it passes back up, passes wick, that's when you want to buy right here. And your stop loss will be below this candle. Because if the market comes back down and stops me out, then that means my trade was invalid. Most of these trades are 10 to 20 pips setups. And it's really that simple, guys. Okay, so let me teach you something. Where did I enter on NAS 100? I waited. I'll even show you something. Now, when there's a lot of junk like this, I do not trade it, even if it broke my structure, just for the simple fact that it's consolidating. But because this candle right here closed bullish, all right? Because that candlestick closed bullish, then what I'll do is I'll put my line right here, okay? You can do that. And then say, okay, once the market comes up and buys, boom, I'm in the market, okay? So the market came up, you can see, obviously it hit my buy stop, and I would enter here, and my stop loss would be below this candle, all right? Okay, well, let's put this right down here. Let's see if it stopped me out. It did not stop me out. I took this trade last week and I won. My first TP will be at this high. I cashed out right here. All right. Cashed out right here. It's that simple, guys. And this is what I say. If the market comes up, does this, comes down and wick you out, and then go back up, leave it alone. Okay. Now, if you want to take a re-entry, that's totally fine. It's up to your discretion. We'll get to trading disciplines here in a second. But right now, I'm just teaching you how I entered the market. Okay. We're basing this off a supply and demand zone, guys. Okay. You could have even entered down here. Now, why, Jonah, would you enter down here? Well, if you look at this candle, you see an indulging happen. We call this a I think it's a morning star. I think it's a morning star. You see all this market structure happening, but you see candlesticks right here, and all of a sudden on a 30-minute, you see these two candlesticks engulfed these candlesticks. That's confirmation that the market wants to go back up. Now, do I buy there? No. But if you would like to have a little secret nugget of buying at a low, you always want to look at your candlesticks and your market structure. Even this right here, these little things right here are market structures. The more you dissect the market, the better you get. But we keep it simple, guys. We wait for structure to break, okay? All right, so let me go on gold. I'm gonna go ahead and give you past weekly trades, okay? So turn on session breaks because I gotta remember everything where I sold. Okay. I will tell you where I sold and I'll tell you where I buy. All right. So I'm gonna go ahead and delete this. And I'm gonna tell you how I got in. Okay. So boom. What was that big buy that happened? It was right here. That's right. Boom. Okay, so now we can take this off. So I realized on a 30-minute time frame, again, guys, just what I told you, what I taught you was very simple. I placed my market structure right here. And I know gold is notorious for whipsawing people out. And the reason why people cannot trade gold is because they're always trying to trade these M's and W's. They're trying to impulsively get in when all you got to do is wait on your confirmation to get in, okay? I dissected this market and I said, okay, the market is trapping here. So if the market is trapping here, then obviously something's bound to happen, okay? Now, at this time, I gave my students this signal, okay? At this time, the market was right here, okay? I told people it was going to go to this market structure and head back up. I didn't expect this full move to happen, but hey, that move still happened. Why is the market expected to go back up? Okay, like we said before, I'm not even going to weekly, but if you go on a 4-hour, the trend is up, okay? The trend is up and it shows no signs of slowing down. Gold was showing no signs of slowing down. You know, that's a big thing, guys. When the market doesn't show any signs of slowing down, that's when you're like, okay, I'm buying this bad boy, okay? So the market was, number one, not showing any signs of slowing down, all right? So it was buys. 2, it has to come back to the area it broke in. It doesn't have to come back that same day, but more than likely it did. It came up, and like I said, where I told my students to buy right here, it came right back down and boom. But you see what happens with patience when you are just like patient, guys. What happens is you get bigger gains. Okay, so I'm gonna tell you where I bought. All right, let's delete this. And actually, I sold this too. Now, people's like, oh, you can sell on an uptrend? Absolutely, because my strategy doesn't require whether you just stick with the trend. As long as you got your confirmations, it does not matter. So I went on the 15-minute time frame. I usually go to the 15-minute for my entries. I think this was pre-London, pre-New York. I was up and I saw this baby candle right here close below my structure. All right, it closed right below my structure. Let me go ahead and zoom in for people who need to see it better. Let me make this white. This baby candle right here closed below my structure. All right, it's confirmation of sales. Can anybody guess where I sold? You can type in the chat. Can anybody guess where did I sell? Was it the next candle? Was it that green candle? Based off this close of the structure, this is confirming that it's closed right below. And it's fine if you guys don't know. So what I did is once this bad boy crossed this wick, the open of the next candle, very, very close. Now, can you do that for the open of the next candle? Yes, because it's immediate bearish candle. So can you open up on the next candle? Absolutely. You might experience some drawdown, but it went down. But the reason why I don't do that, because I want to make sure once it comes back down and it passes this area, that is telling me it's a continuation. Because a lot of times the market would close, do this, and do this. And I hate when it does that. So what I do is, okay, I'll wait, okay, I'll wait. Let the market do what it do. I'll wait. Get all those people. Let it do what it do. Let the market do its bullcrap. And then boom, activate my sell stop. I'm saving myself from drawdown and losing a lot of money. So what I did is once that bad boy went, I entered my short position right here. Now, guys, my stop loss is above structure or above this candlestick. That was only 2, 3, 4. That was only 30 pips on gold. Now, some of you guys like 30 pips on gold. How? 30 pips on gold? Yeah, that easy. Stuck with my confirmation, caught this whole move. As soon as I took profit right here, Why? Because I told my people where the market was going to boom back up. And sure enough, what happens, guys? This bad boy happens. Engulfing. Ooh, broke structure again. Okay. Let's do some homework, guys. If structure broke right there, right back to where I want it to be. Now, some people will say something like, here, let me move this right quick. Hold on. Move this thing. Make sure there's nobody trying to get in. All right, do this. Boom. All right, so where do you guys believe? Now, some people will be like, oh, this is just a retest. Well, anytime I see these bulls coming in like this, I don't even front. I'm not looking for no retest. This thing's buy and is an overall buy trend. But my main confirmation is this bad boy closed above. All right, I caught it two ways. So where do you think Mr. Jonah Green bought? Let's do some homework. It's a bullish candle that closed right above structure again. This one doesn't really have a wick, but the games never change. I actually entered on this sell candle wick just because I wanted to make sure I was a little safe. I put my stop loss above here. And I did ride it up like right here, somewhere right here. And that's how I caught gold. Could have caught gold on this bottom. Something told me to buy. I just didn't want to risk it because it could have came back down. So I just waited for my confirmations. But you see what happens when you wait on your confirmations. Let's go on with another example. Australian US dollar. I profited on Australian US dollar the other day. Where's it at? Yep, here is my bad boy. All right. All right. So I profited two ways. I profited buying up and I profited when it sold. All right. So none of this was here. None of this was right here. Okay. At the time, the only thing that was here was this bad boy right here. That was right here. Okay. So I called out to my students. I said, there's a break that might happen at this buy. Now, guys, I don't predict the market. All I say is, look, there might be a break that happens at this high. It's a strong level, a psychological level right here. And it might get to this level and whatever happens, happens. Okay. So what you think I did? I saw this bullish confirmation. It closed right above structure, right, people? All right. What do you think I did? I just waited for that to happen and placed a long position. Stop loss below structure. Let's see how many pips you're risking. 8 pips. All right. 8 pips, and I got 17 pips on this. Now, I had a big lot size on this. So for me, I didn't have to hold. You know, if you feel like you are scared that the market's going to come back down, just put it at break even or just trail and stop your it. Okay. Unless that, do not remove your stop loss. Let the market stop you out if you need it, but just stick with your trading plan, guys. I promise you this stuff will make you profitable if you just stick with your trading plan. Sometimes the market does crazy stuff and we have no control over it. But let me show you where I sold. Last Friday, I sold this bad boy. I had this market structure right here. And I said, okay, something is liable to happen here. There's 2 things that can happen. All right. The market could come back up and just continue, or it can come up, give me a rejection, bearish, boom. Okay. So let me break this down to you. If you guys think that I sold up here, you're mistaken. I did not sell up here. Okay. The psychological level you mentioned, is it on the 4-hour or the 15-minute? So you can use it on the 15-minute. It depends on like what you see as psychological level, because my psychological levels might be different than yours. I would recommend you doing the 4-hour. And the reason why I say the 4-hour is because overall, you can see where the market is touching. You can see where the market is respecting. These are the areas that the market is respecting. And next, right after this last example, I'll show you a psychological level. If you look at whole numbers are really good to know your psychological levels. All right. Like right now is at 77845. So basically technically 77800, 77700, 77600. Those are really good psychological levels. You know, the market makers love the whole numbers. But once I saw this bearish candle happen, because the market, what tends to happen, guys, is sometimes the market, after trending for so long, it will create this high, come down, and create this high again. Now, does that mean it won't do this? No, I'm not saying that. But what I'm saying is the market can do this, come down. And once I see wicks at the top, it comes back up, give me another lick, you know, it comes back up, give me another wick. That's confirmation that it's want to sell. Okay. And then when it does this bearish engulfing, okay, I'm looking at sales. Even if it's the market is buying up, I'm looking for sales. Now, you guys are probably curious, where did I sell? Okay. So on the 15-minute time frame, let's go ahead and delete all this. All right. These were my psychological levels. Okay. So what I tend to do, and you can do this on a 5-minute time frame. I recommend not the 5-minute time frame just because it's a lot of fake outs. But the 5-minute time frame is awesome when you're looking for touches. Okay, so for example, if you're looking for the market to come back and retest these areas, then finally see your confirmation go, then that's 5 minutes are perfect for that. Okay, I don't trade my entries or anything based off of that. So you guys probably don't know, I entered here. Now some of you guys are like, Jonah, why would you enter here and not at the top? All right, question. Can anybody tell me why I would enter here. All right, I'll tell you. This area, it's a psychological level that's been respecting for so long, okay? Look at this, all that, all right? Does that make sense to you? So you have to question yourself, okay, why is it coming back to this area? And I said, I'm not trading this MW because this bad boy can just do this. It can just do that. I'll wait for the closure again of a what? A sell candle. Oh, but Jonah's it's in a uptrend. It doesn't matter. It broke my structure as sales confirmation. I'm getting in. And this is the thing, guys, you cannot be afraid to get in this market. If you want to profit, you cannot be afraid. You have to get in the market. My issue was I was so afraid to get in the market. And once I'll get in the market, I'll wait till the market get like all the way down here. And then the market will start pulling back and just stop me out. You guys don't want to do that. You guys want to just get in when the market gives you confirmation. Okay. Now, you could have got in right here. I personally got in right here because one, I saw too many bearish engulfing confirmations. 1, 2, and even broke a break of level structure 3. I'm like, I'm in. I don't care what anybody says. And it happened so fast. That's how I knew, especially on a Friday, that it was going to reverse. So I actually got in right here. All right. Stop loss was above this candle. That was actually, no, I got in a little bit earlier because I was way too confident. So guys, the thing about me is once you start understanding what the market is doing, you start getting confident. So it was a 13 pip stop loss. My TP was right here. Why is my TP right here? Look at the zones. All right. I had a very big lot on this. I had a very big lot. The funding account really gives you, leverage. So, Joe told me about that, and that's great. And I had 22 pips out of that, and I profited big. And I was like, praise God for that, and it was amazing. So, guys, that's the way I trade. It's so clear. Now, let's just say if you wanted to get on this M, and you say, hey, Jonah, I do want to trade this M. Hey, ain't nothing wrong with that. There's not one way of trading. I'm just showing you an effective way to trade. All you got to do is wait for the confirmation of this engulfing candle, okay? And because you have your confirmation that there's a lot of wicks up here, then you'd be like, okay, I just want to sell. Bam. And just put your stop loss above here. That would be a confirmation, okay? So if you guys want to get in early and then just like let that bad boy drop, I mean, you would have caught that whole move. But for me, I just want to be careful, all right? All right, so before we move on, where's my questionnaires? There it is. That was my past Friday trades. I can go over GU and GJ in a little bit. Psychological levels, real quick, just like 1 minute. So if you look at psychological levels, these are like your psychological levels. Where the wicks are touching a lot, that's your psychological levels, okay? Now, some of you guys are like, well, dang, Jonah, looks like you're scalping. Well, I am scalping. But did you guys know that your scalp can turn into a swing? It's called trailing stop, guys. These are your psychological levels, okay? So when market tends to respect these levels, these are the levels you want to break, okay? But even if you want to look at supply and demand, you could just go down the 30-minute time frame, just as low as the 30-minute time frame, and it'll show, the market will literally show you where these levels are. Even though GJ didn't respect it too much, you know, this bad boy still took off, gave you 52 pips, okay? It still gave you something. Your stop loss will be down here, all right? It still gave you something, okay? So your levels of psychological levels where the market tends to respect structure a lot, okay? And that's what we're looking for, all right? We're not sitting here going on a 4 hour and like, oh man, let's go all the way back in the past and see what happened. I mean, you can. If you're testing out a strategy, I recommend that. But no, I'm just giving what the market gives me, okay? Plus, if you're just looking for a head and shoulder right here, you can obviously see this head and shoulder, all right? And people say, oh, that's a retail way of trading. Oh, really? It's a retail way of trading? Okay. If it's so much of a retail way of trading on my bigger time frame, okay, then how come GJ just gave me freaking 56 pips, 60 pips? Hey, I don't care if it's retail trading. I don't care if it's bank institution trading. I'm out here to trade what the market gives me, period. And that's the only thing that should matter. Now, hold on, let me right here. Cool. So here's the issue, guys. We get so caught up in the retail trading world when at the end of the day, almost all of us are retail traders. Why? Because none of us know exactly 100% how the market makers trade. None of us is. If we did, we will all be profitable. You got to think about that. You trade what the market gives you. If you lose, okay, you trade to win another day. If you lose twice, if you lose it once or twice, get out the market, stay out the market. Don't look at no other pairs and say, oh, how can I get my money back? Nope. If you lost, you lost. That's why it's called managing your risk. Okay. So regarding, psychological levels, this is one right here. Okay. You can obviously see, I don't use trend lines much, but when I do, you can obviously see it even respect my trend line and respect structure, and it went right back up. Okay. Now, if you was to like really trade this pair, you could have bought there, but I would say, okay, where would I buy here, Jonah? What seems logical to me? Well, obviously right now, nothing really does because it's just like ranging in a little bit. But if you want to, you see this wick, wherever there's wicks, that's your opportunity. So you can wait for this bad boy to break and you're on your way up. It's that simple, guys. And you can do this any way you want to. You can find your own level of structure and say, I love this. Note, if there's wicks like this, just be aware. Because this is all level of structure. All this is level of structure. All right. You might get caught up in the range trading. But if you see this, when the market breaks, this is clean structure. So the market could just fly up. Okay. But when you see all these wicks, the market can literally like fly up and just do this. Okay. Because it's just all this to your left is structure. So always look to your left when you're trading. All right. Let's move on. And then we can get to some questions. All right. We already went over the macro trend, but just in case for those who are just getting in, for example, GU. Love GU. GU is one of my favorite pairs, even though it's acting lame right now. Let me go ahead and delete this. All right. So after this, we can go to some Q&A sessions, and then we can move on, and we call it a wrap. All right. So obviously, as a swing trader mindset that was taught by one of my past mentors, we were, this is a sell. Okay. So in the long run, GU is sells. However, because I'm trading what I see and not what I'm not pastly seeing or seen in the past tense, I'm looking at the future. I'm looking at the present tense, excuse me. I see this. Okay, this is nothing but buys here. All right, the weekly is telling you it's nothing but buys. All right, and on top of that, it's telling you that the market wants to come back and probably fill these wicks. Now, the market is also at a level of structure, so I'm also careful of taking that. So the market can literally plummet from here. Okay, and then continue back up. All right, because that's what That's what the market does. It does two things. It's either doing like this, or it's ranging. Okay. So you guys need to take in consideration of all that. But I only use the weekly time frame to know where the market is heading and where it potentially can go, so I can stay with that. All right. So if you guys want to also tap in the chat, can you guys see the candlestick clearly? Can you guys see also the background and everything? Like, is everything clear? It doesn't look like blurry to you. Just say yes if it's clear and no if it's not. Awesome. Thank you guys. So, because I usually go off of this bad boy because it's just a lot more cleaner. Hold on for a second. What in the, okay. Hold on for a second, guys. All right. Yeah, I usually go by that one, but just because I like my black mode, I think it's better for the other one. Sometimes about that. Okay, so what I like to do is, and guys, you can adjust this. Remember, on the right side where these numbers is, you can go up and down to adjust, make it tighter. And that way you can say, okay, what is the market doing? Boom. All right, it's still on this uptrend. All right. Now, if it breaks this trend, we might have some sales coming in, you know, and this is area market structure, like we've been playing out, area market structure, and that's where I'll be selling. However, because I don't do trend lines, I just use them as my confirmations where the market is going. I just use that to show where the overall trend is. Now, what if you're a smaller time frame trader? Do not go below the 1 hour. Only use the 1 hour to define your most recent trend. Okay, do not go to 15-minute, don't go to 5-minute, just use the 1 hour time frame. And I'm telling you, it works magic. Okay, I can make this thing as small as possible and just do just like this. Okay, you guys wouldn't even know that it's on a buy if it was just like this. But because I lower that bad boy, I'm like, okay, look what the market is doing. It's doing the same thing over and over again. So obviously this thing is buys. Okay, so I want to stick with buys, but with my market structure, it still plays. Okay, it's kind of like you got it in your mindset that it's buy, so you want to be careful with selling. But because it doesn't really matter what the market does, we're just trading what we see. Okay, all right, boom. I caught this bad boy right here. Let's get to it. All right. And I'm gonna do one more, and then we can go to Q&A sessions. Bad boy broke right here. Okay. All right. Simple. Boom. Now, because the stop loss is below structure, but it's sitting right on structure, you can put it below this candle, or you can say, you know, either below this structure, or if you say, I want to even do bigger, below this candle. Guys, the more that's just below structure, the better. Okay. All right. So where would your take profit be? All right. Well, let's look to the left. You got wicks all over the place, but my TPs would be this high. Second one would be this high. A third one would be this high. Now, obviously, I did not hold this whole trade. I held to right here, which was a 25-pip move, but you could have put your stop loss break even or in profit, and you would have got a 58-pip move. Okay. So this is what I mean. You can turn your scalp to a swing, you know, put that bad boy at break even and just keep riding it up as it goes. Okay. Now, obviously, you probably would have been stopped out at break even if you was holding this trade, because the market tend to come right back up here. And then if you wasn't paying attention, it came all the way back down here. Well, no, you wouldn't have been stopped out. Excuse me. You would have rolled that thing up. So 58-pip trade. Now, guys, even though the market is selling off, what do you see? Structure. So even if you missed this trade, it still came all the way down there. So it's a potential that this market might go right back up. Now, what do you do when the market goes back up? Here's another range. This could be a potential for next week, guys. It's the same thing over and over again. I'm trapping the market. Okay. So if the market does this, it closes. All right. All right, cool. Let it do what it does. I'm buy. All right. And my TP zone is at this level right here. Out of here will be another 45 pips. Okay. And last, in the last example, I traded UJ. And then we'll do Q&A sessions. Go ahead and do this. At the time, UJ was right here. Hold on for just 1 second, guys. All right, cool. One of my students just reached out to me, and I had a scheduled meeting with him. I had to tell him to wait for a second because I'm still in this meeting. So at this time, the market's right here. Like I said, guys, it's easy. Boom, boom. Obviously, the market did not come back down. Now, what do you do? Here, it was right here at this top of the wick. What do you do when the market shoots up like that? Same thing. The market shot up, it closed below above structure. Now I didn't get in right here. I actually got in below right here. Very, very confident. Rolled it back up. Where's my high? Let's go look to the left. My high was right here. Did it hit? Absolutely it did. My stop loss was 25 pips. Sometimes the candlesticks are longer. You can shorten it if you want to. A TP was 68 pips. Okay, a little higher, 72 pips. All right, so guys, that's how I trade. All right, if it hits you out, it hits you out. If you win, excuse me, if you win, you win. And guess what, people? I only trade a couple pairs. I trade these 3 pairs. I mainly trade these 3 pairs. Everything else, I really don't look at. Now, NAS 100, I do trade as well. Australian US dollar, I trade from time to time. Sometimes I just look at other pairs because I want to, and I just, I get in the market. But in reality, I try to keep it stupid simple, and I just stick to 2 or 3 pairs. Trust me, if you trade it over and over again, you become profitable. All right, does anybody have any questions? I talked long enough. I'll give you guys time to ask. Feel free to unmute yourself if you want to ask any questions, or just type it in the chat. And if not, then we can just move on to some closure. If you guys want me to even look, I'm gonna give you a free, analysis. If you guys want me to even check on some pairs for you on what you think I see for a setup for next week, I can give you that as well. Do you guys have any pairs you want me to look at? Oh, absolutely. I'll show you a losing trade. Look at a GU possible setup for next week. Absolutely. Oh, guys, and guess what? I do lose. I am one of those mentors. I don't win all the time, okay? But when I lose. But when I win big. Why? Because I properly have a risk management, okay? I'll show you a loss. GJ was acting so weird last week. It was actually here on this Friday, all right? It was kind of my fault. I kind of got in a little bit too late on this one. I really entered based off of the impulsive bearish candle versus waiting for a confirmation, and it wicked me out. So this was an area that I was looking at. But I looked at the 30-minute time frame, and I was like, okay, you have all these wicks right here touching as well. All right. I think it was right here. Yes. Now this was dummy of me, but because all these wicks were touching and I saw the bearish momentum happen, I was like, you know what? I'll at least get in once this happened. And when I saw this big bad boy happen, I was like, let's go. No, excuse me. It was this bearish candle. Sorry, guys. It was this bearish candle. Now notice, you guys are probably like, well, John, why would you put, an area of structure right here? Well, because these candlesticks to the left here, these candlesticks to the left right here, were just like another area of structure. Now, this is just me being stupid because it wasn't clear structure, but because it pulled back, for me, it was. And because it came back up, that's still structure to me, So it wasn't clear enough. And so when I saw this red bearish candle happen, boom, I actually had my stop loss right here because I didn't think it was going to really come back up. And sure enough, the market came back up, wicked me out, and just sold. Okay. Sometimes I cut my losses short because I'm not willing to risk it that much. And like I said, guys, if you want to cut your losses short, it's totally fine. Just know that if it goes in your direction, hey, that's on you. Let me see. I think I lost one on AU last week. Yes. So after I took profit, right here, I saw it come back down and buy back up. So what I did is like, I wanted to buy again. All right. And although it did go the way I wanted to, just not like all the way. I have my TP right here. Because, like I said, I scalp it. And I thought it was just going to bust through because the market just kept going up. Well, never came back to my desired TP and just hit me out. So yeah, I have some losses, guys. All right. So this is one I want to give you before we move on to GU. We're going to do some questions. All right. 10 trades. I'm going to teach you how to be profitable. 10 trades. All right. You got 10 trades. Risking 10 pips per trade to gain 30 pips. All right, let's do some math. I hope you guys are good at math. If not, it's totally fine. I'm helping you out. Let's just say out of those 10 trades, you took 10 trades for the week. All right, you risked 10 trades. Each trade you risked, let's just say, what's that, $1? No, $10 per pip, which is a 100. All right, $10 per pip. All right. So let's just say you lost 6 trades that week, and you're risking 10. You're risking 10 pips. You lost 6 trades. How much are you down for the week? If you lost 6 trades, now you got 4 trades to go, but because you lost 6 trades, how much are you in drawdown for the week? She said $60. Let's go up a little bit more than that. Let's add another number to that. So let's just say this. We're down $600. All right, so let's just say it's Wednesday. You're down $600. All right. Joe, can you hear me? Can you hear me perfectly, Joe? Okay, cool. So let's just say you lost $600. It's Wednesday, and you're like, oh, okay. So the question was, with the 6 trades, and you're risking, you're trading 10 trades, you're risking 10 pips, but you're trying to gain 30 pips each trade. You took 6 trades, and you put $10 per pip on it, which is 1.00. You're risking 10 pips per trade. You took 6 trades this week and lost them all. And remember, each trade, you're risking 10 pips with a $10 per pip. How much are you down negative? You're down $600, okay? Now, you have 4 more trades to go, though. And you won on Thursday and Friday. Like you said, Monday, Wednesday, Tuesday, you lost. You were down negative 600. But with the 4 trades, you won in a row. You was aiming for 30 pips. All right. All right. And since you won 4 trades, got to think about this, guys. You won 4 trades. All right. With 30 pips, it's $400. Every trade is $400. Okay. That means you'll be up for the week now, $1,600. I'm pretty sure. Let me calculate that just in case. Yep, $1,600. Now, what we do is we take that $1,600, and this is the reason why I'm giving you guys the sauce of becoming profitable. A lot of traders do not do this. There's only a couple of traders that I know that do this. What does that equal, guys? What does that equal right there? There you go. You're up $1,000. This is the reason why you do not panic. When you lose, you lose. When you win, you win. You can have a losing week in a winning month. This right here is the power of Forex. When you risk properly, you have proper risk management. Me, I'm gonna tell you my secret. I only trade, my setups is like 1 to 3 trades per day. If I lose 2 trades, I'm out the market. I'm not trading no more. I'm like, I'm done. If I win 2 trades, I'm like, okay, I could do a 3rd one if I want to. But you have to think about this, guys. When you discipline yourself to where you have proper risk management, and on top of that, you're limiting yourself in certain trades on when and when not to over trade, at the end of the day, you're going to profit. So don't worry about, oh man, I had a whole losing week. Okay. You have a whole losing week, you might have a whole winning week the next week. And on top of that, you're going to be above your losers. And I think a lot of people, this is what happens, guys, as traders. We lose. And then right after we lose, what happens? Oh, it's the mentor. Oh, I got to go somewhere else. Oh, I'm going to start looking for a different strategy. I'm going to start doing this and that. I'm going to say this. If your strategy has been not winning for a whole month, it's time for you to look for another strategy. I know what it's like. But you guys have to stick with your strategy. If you know it's profitable, stick with it. If you want to change this strategy, hey, it'll work wonders for you. All right. Okay, so let's go over GU Outlook.
Hi, Jonah.
Yeah.
Yeah, so let me interrupt you for a minute. I have a few questions.
Oh, go ahead, my brother.
So do you, let's say you've entered a trade, then immediately it flips, then it starts going the opposite direction. Do you have like a certain number of pips you're going to wait for it to go for a drawdown, or you just let it hit your stop loss?
Yeah, so you're saying like, if the market, let's just say you enter in the buys and it starts selling, do I get early or do I just let it hit my stop loss?
Yeah.
Okay, so it depends. People say don't be emotional in this market. You're going to be emotional, period. It depends on how much you're willing to lose. And if you're saying, you know what, if I want to re-enter, I will say this, cut your losses if you're looking for a re-entry. If you're not looking to re-enter the market and you're not happy with the loss, don't re-enter the market and let it stop you out. Because here's the thing. Okay. I see a lot of times, Joe, where we'll get out the market. It's happened to me before. It's happened to me actually on GU. I can't remember, somewhere in the area. I think, it was right here. And I was mad. I was so mad. I was mad at myself and everything. GU broke structure right here. Yeah. Did it break structure right here? I can't remember. It was something like that. Let's just use this for example. Let's just say I bought right here, right? The market, and I had my stop loss to hold here. Market came down, but it never hit my stop loss and went back up. Well, the fact is, when you allow the stop loss to be hit, it validates that you were wrong. When we cut our losses short, we're saving our pockets, but we might be missing the opportunity when it goes right back in our right direction, which will cause for us to be re-entering the market, which is fine. So I always tell myself this, when that happens, make sure that you are comfortable losing whatever you want to lose. And if you're not comfortable losing whatever you want to lose, cut your losses. So if you're looking for, okay, how do you know that your setup was invalid even before it hits your stop loss? All right, darn. So you can just do simply this. Let me look for a trade setup. GU's been clean. Okay. It's this one. Nope, that broke. There's going to be one. That was the head and shoulder pattern. Yeah. Right. Okay. Let me just go ahead and draw it out. So let's just say, let's just say the market's right here. Okay. Let's just say it busted up. All right. It closed and market comes down, retests this. You're in the trade, right? You're in profit, everything, stop off the low here. Well, let's just say the market just decides to come and does this. Soon as the market closes bearish, soon as the market closes bearish right here, that's when I'm like, okay, it closed right back in my range. This is probably an invalid trade. And that's when you can go ahead and take yourself out.
Sure.
Yeah.
Okay, thank you. So the next question was, when you have drawn the resistance level, then your strategy, you're waiting for the candle which is at the consolidation to come and break, then closes on top of it, then the next candle to now go up. So what happens if that candle you're waiting for just goes up without stopping?
All right, let me give an example. So UJ is a perfect example. Maybe something like this. Are you talking about like something like in this area? You see how the market came back, retested the area, went back up, you're in buys, and then it just came back down?
Yeah.
Okay, and what was your question again about that?
So my question, like, you see, it went down, then the next one, you're having the next candle just comes like it was in a consolidation on level, then you are waiting for the next candle to come and close on top of the resistant level. But what happens, that candle just shoots up. It doesn't stop to close, it just goes up.
Oh, okay.
So such a situation, do you chase it or what do you do?
Go, okay.
Or you just leave it?
Go do that. Okay. Yeah. Something like, yep, this is it right here. Let me go on the 1 hour because I remember seeing this on the 1 hour, 4 hour, something like that. Okay. Where's the 4 hour thing? I think it's a 4 hour. Okay, so let me look at the 30 minute because gold did do that. It's like right here. Remember, this is the 30 minute. You're talking about this bad boy right here. It never comes down. It just booms up, right?
Sure.
Yeah. So anytime I see a candle do that, that's telling me that there's two things you can do. You can leave it alone, wait for the retest, or you can go ahead and buy that sucker. Me, I might buy it. The reason why, but this is gold. The gold is a lot more volatile.
Yeah.
But let's look at UJ because UJ did that. And I caught that trade, but I caught it on a retest, but it still did it. Okay, so let's just say this one right here. Oh no, that's not it. What I wanted, what I would not do, Joe, if I saw like this whole market play out right here and it closed below, I'm not entering this candle. Sorry, I'm leaving it alone. Okay, I do not enter on closed candles like this. Now, let's just say if the market dropped right here, remember, let's delete this. This is structure right here. Okay, you see this?
Yeah.
So this is structure. So even if you see a big engulfing candle right here, okay, Joe, you know us based off of us trading in the platform you used to trade in, you know this big engulfing already, engulfing all these candles. I don't care what anybody say. I'm selling this bad boy. And when I sell it, I'm gonna tell you how I sell it. Now it's risky, but the reason why is it's engulfing all my candles. So I'm like, now majority of the time, 80% of the time I let it go. 20% of the time I'm taking the risk once it breaks the structure. Okay. So so you're in a 24 pip for a 54 pip gain. You can take that risk. And why? Off an impulsive candle? Because it broke your level of structure. And if you think about it, Joe, the more it ranges like that, especially on UJ, you know UJ, the more, anytime you see ranges like this is telling you, okay, we're trapping buyers and sellers. We're about to do something. And when it just shoots down like that, oh, that's telling you gone. But me, Joe, honestly, I usually stay away from it.
Yeah. And okay, the last question.
Yeah.
When you're placing your levels, are you putting them on top of the wicks or at the end of the body?
Yes. So it's to everybody's discretion. I usually do the wicks. And here's the reason why. Because when you do wicks, most candlestick respects the wicks. They respect both. But remember, a lot of them fills the wicks. Okay. So let's just say I had a candlestick pattern. Okay. That was like this, a big wick. A lot of times the market's just not going to it's not just going to respect the close of the body. Sometimes the market likes to come down and fill at least half the wick before going back up, So I usually try to like box up structure like this. I'll do something like this. Now, completely, of course, these are the wicks, but when I box it up, I make sure I go from body to wick. So you can do it like this as well. That's totally fine. All right. If you want to be, there's no right way to do it, but if you want to be safe, remember, the simple and more safe your trading is, the better it is. But for me, Joe, because this was more recent, I just did from body to wick. Body to wick. You see it close above this structure. It's a past. What you always want to look for, Joe, is you want to see it past the wicks. Okay. If it comes up and then it just like, you know, creates a wick that's equal to it, I'll be skeptical about it.
Okay. And about gold, gold really moves very fast.
Oh,
And if you put a very, very tight stop loss, because I see you don't have a fixed stop loss.
Mm-hmm.
Yeah, so I was thinking, is your stop loss dynamic, or maybe you just look at the previous candle and you just place it below, even if it is 40 pips, or
yes,
or what do you do? Because
yep, I just do the candlestick, because if you think about it, if the market which I remember when I took the sell. I didn't tell you guys this. I took this sell up here. So I'm glad that you say this. I took the sell right here. I took it to the bottom right here. Hold on, guys. I think Joe, he's in. Let me see. He should be in. Okay, yeah, he's in. Yeah. So I took it. Once this bad boy engulfed, though, this was my level of structure. It broke. And the reason why, guys, I took this trade is because it completely engulfed and it happened so fast. It happened so fast. Now, I did this off the 5-minute time frame too, okay? The market came back, hit here, came back, touched here, and completely engulfed and broke my structure. So I said, you know what? I'm gonna go ahead and enter. All right, so my stop loss is above here, okay? So that would have been 70 pip stop loss. Let me see, 9, 8, 7, 6, 5, 4, 3. Yes. So in regards of that, stuff like that, yeah. I mean, that's just how it is. Now, it's not like this for me on gold all the time. The reason why I put my stop loss up above here is because I just don't want to get wicked out. So if it did come above structure and stop right here, I'll take myself out the trade. But I'm just putting it right here so I don't get wicked out. That's how I trade gold. Now, if it was something simple, like, if it was something simple like this, all right, boom, close above structure, you could obviously see that was a very tight stop loss, okay? That was 20 pip stop loss for it. And you would have got, let me see, 72 to 77, a 50 pip stop loss. Excuse me, a 50 pip gain. So it's all about the candle. And if you're not fine with that, then don't trade it.
Okay, thank you.
Yes, sir. All right, we've made it to the Q&A session. Oh, GU, sorry. So my thoughts on GU. It is, boom. This wick has still not been filled yet, but it is right here. All right. What do we see, guys? Again, see it's up. Now, we could see something like, like this happen, and then, right back up. So let's go on the 4-hour. All right. So whenever you're looking at stuff like this, you see this pullback happen. Some of you guys like what happens. Okay. I mean, it's almost at that trend line, But like I said, could break this area right here, you know. If this area breaks, you know, shoot, you know, boom, you know, down to this low. This is an area that it could retest, boom, could possibly go back up, you know. Because remember, the monthly, there's a monthly high up here it has not touched yet. That's probably still in a wick, so it might go back up. So I can definitely see this pair retracing. Now, some of you guys are like, okay, Jonas, so how do you actually trade live with it though? Okay. Oh crap. I trapped the market. If I'm not sure, like right now it's kind of ranging. Where is that from that drop? Boom. Easy. Easy call, guys. I don't make this thing complicated than it needs to be. All right, let's go to the 30-minute. You see how easy I box that up, guys? This could be an area of resistance where it can sell or buy, because remember, this is a very high right here. So you always want to wait for your confirmations. Structure was broken right here. All right. And another area of structure right here. So what do I do, guys? And if you want to be a little bit funny, this is structured because you do have this wick right here, and you have a wick right here. All right. So what I tend to do, and it's funny because me and my best friend, we trade together, and we always call these things out, you know. All right. You can always just simply do this. Breaks below. Closes. Say it leaves a wick. Sell stop. Let it come back down. TP. All right. What happens if it buys back up, Jonah? What if you see this big engulfing candle where the candle's like, oh shoot, you know? Okay, you can enter right there if you want to. Put your stop loss below there, but me, all right, same thing. Boom, close. All right, stop loss. Excuse me, entry right here. It comes back down, let it go, come back up, boom, enter, ride it up to the highs. Okay, so that's why I see it happening. But like I said, GU right now is, it did, like I said, it did form this M. It left this wick on top, so it could come back to fill that wick. That's the reason why I'm like, guys, we got to be careful on this. That's the reason why I always box up my charts to like get in and get out the market. I'm taking what the market gives me getting. Now look, this is a 35 pip drop, okay? If you get in for $1 per pip, that's like $35 for you, okay? Take small stuff. If you got a small account, take it. You know, if you got a big account, okay, raise your lot size a little bit, but use risk management, okay? Just always know that when the market closes in any way where you're buying or selling, remember to always put your stop loss below the previous candle. Okay, so if you entered on this candle, put your stop loss below the previous candle, okay? GU for that will be 25 pips. It is what it is. We're riding on up to these zones. You want to take profit right here? Take profit. You want to take profit up here? Take profit up there. Okay? Gave you that move. That's why I see for GU on these levels. Now, you're not always going to be 100% correct. Most of the call outs that I gave to my students have been on point. I don't send out, I sometimes trade pairs that I would not still recommend to my students. So yes, I do trade certain entries, but I won't send in a student because I'm like, even though I'm trading this one, this is a little bit risky. I don't want to take this to my students. That's the type of mentorship, you know, I run. I don't want to, just because I'm in a trade, I'm not going to say, oh, you guys enter. What I'm going to do is I'm going to send you a setup that is more valid, but I allow you to operate off that setup. Now, if the setup is clear, if it's clean, and I enter the market, yes, I will tell you, hey guys, I'm entering here. I'm putting my stop loss below this candlestick or above this candlestick. And then if you guys want to trade with me that way, whether it's live or whether it's like analysis, because I know people are busy, you know, everybody is, then boom, that's how I do it. All right, so that's GU. Anybody else have any pairs they would like for me to? Okay, hold on. Yeah, more bearish momentum. Sorry, I just now seen the chat. Yep, more bearish momentum. Sorry, guys, I meant. Yeah, I know you. We know your internet lagging. You good? Does anybody have any pairs that you guys want me to check for next week? If not, then I'll just give you my special offer and we can call it a weekend and we can just see what happens next week. Anybody want to be unmuted? Anybody want to got any questions? Can we do GJ? Absolutely. I have not liked GJ lately. Oh, I will tell you a trade that I missed because Joe, I did miss this trade. It's a little mad. Now, sometimes, guys, I do enter impulsively. So anytime I do see something like this in a broke structure, you know, I could simply just do this and leave my stop loss there, ride it down to that next low. I would have easily made like 70 something pips, okay? But because I was patient and I said, nah, don't do that, Jonah. The market still did come back up to this level. All right, and it did kind of like, it did come back, probably would have got stopped out. But see, this is the one of the trades that you would have got stopped on them because, and it's a Friday, guys. So, I mean, you know, and you see where this candlestick broke, you still would have got you at least 15, 17 pips. So that's why scalping is so awesome because you can get in and out the market because you see this bad boy happen. But this would have been a stop out too if you was buying it. But for me, I was selling it because I saw all this bad boy here and I saw this bad boy take off and I'm like, on a Friday, a little skeptical about this area. So some days, guys, it's just going to happen. You're going to get stopped out. Some days you're going to profit. I mean, I know mentors who had a really bad losing week and it is what it is, but that's why you say the reason why they have a bad losing week is because they overtrade. But when you don't overtrade, you're like, oh, I lost for the whole week, but dang, I didn't really lose that much. Boom. So for GJ, all right, feel me? It's ranging. Also, if you do trade anything attached to USD, remember, always look at the the DXY, okay? I always look at the DXY. So right now, DXY is at support, but it's still bleeding, all right? And we can go to GJ right after this. So DXY is still bleeding, all right? What do I expect for DXY? Exactly what it's doing. Is that my the demand zone? I expect it to kind of come back up here. Boom, bleed more. That easy. Hey, if it doesn't happen, then we switch and buys. That's all you do. We don't predict the market. We just go with the market gives us. All right. So what do we see? Daily time frame. See that? All right. Boom. Yes, sir. All right. It's buys all day. Buys. You don't see no higher. You don't see no lower lows and nothing. Straight buy since this. Boom. All right. We do see this range. So I'm just giving you a little, you know, thing of what's going on. Okay. I barely traded GJ last week because it was crazy stupid. I did not touch it really. I think I only lost. I lost on GJ last week. Yeah, a couple of times. Let's go on the 4 hour and let's get down to it. Yes, we can trade gold. Yes, we can. Yes, Joe. All right. So this is what I see on GJ. created this head and shoulder right here. All right. All right, let's mark that bad boy up. Even though it's still buys. Boom. All right, let's go on 30-minute. All right, cool. So what I would like to see is, because the market is ranging in GJ, I don't know how much I can trust it. It's just all this range. So anywhere you trade in this range is dangerous. But let's just say you're trying to like scalp, you know, some pips and everything. It's still okay to do this. Boom. All right. You can do that, or you could just do this, because there's 2 wicks right here, and the wick is already good fill. So you can wait for that. All right, you can do that. Now, if you're just trying to be on the safe side, a GJ, I will not trade it. It's just ranging. I don't like these ranging pairs. But remember, you have all this to the downside. There's liquidity to the downside right there. Liquidity to the upside right here, okay? All right. But like I said, you have, remember, always look left. You have a lot of stuff ranging. So if bad boy come up here, it can do anything. I'll be interested in more selling if the market gets here. Okay. I'll just be boom. But right now, honestly, overall, I wouldn't touch GJ. If anything, I'll wait for buys. So I'll probably wait for the market to get right here and see what happens in this area. All right. And if it continues to buy, then cool. You buy when it gets up here. You know what mindset I got, guys? I got the I don't care mindset. Because the I don't care, if I got all my ducks in a row, the I don't care mindset says, I don't care if it creates an M up here. If it buys and it close blows, if it buys right here and keeps going, knocks me in, stop loss under, I'm in profit. If not, oh well, we live to trade another day. That's how you win in this market. You show no fear. That's what I see on GJ. So if you really want to be safe, let's go ahead and take this off, because it did create a head and shoulder. I'll just do it like this. Make it simple for you. Boom. Just wait till it gets to these highs. How about that? All right. And boom. See, wait till it gets to these lows. See what happens here. Okay. That's what I see. Some people do this, and that's totally fine. You know, some people do this. You know, but I don't use trend lines as much. So just trade what you see, wait for one of these to knock out. Now, like I said, it is creating a head and shoulder right here, you know, so it could just, you know, come down to this area right here. It has been up for a very, very while, last couple of weeks, so it might retrace hard. That's what I see. All right, let's go to gold. Same thing with gold. I'm really touching gold as much. But what do we see? Let's go to daily. See buys. Market could, like, 4 hour. Market could come back right here. You know, could come back right here. Come back up. It could even come back right here because there's a wick, you know, to retest that area again, go back up. You got this whole lever right here, you know, that is messing with. But because gold has been on an uptrend for a very long time, it can retrace. So what do? I'm just letting you know where this guy's, I'm just letting you know, guys, where that bad boy can retrace. Okay? I'll just do this. Simple. Box that mug in. Now, notice, like, Jonah, so what do you do when you got all these wicks right here? Well, shoot, I'll show you what I do. All right. They don't scare me. Gold don't scare me either. I'm just cautious with gold. That's it. All right. So you got this area right here. And if you scalp in that bad boy, you know what the deal, you know what the trend, you know what the deal is. Okay. You can hold it. I realized that the market came down to these levels and messed a lot. Okay. So I'll wait for the market to bust here. Boom. All right. If not, market can do this. This is structure right here. And just continue up. Two of those things. But I'll tell you what, it may come back down to this level again. It may come back down to this level again. All right. So be unaware for this level and this level. This level is a very clean level. Now, the reason why this level is a really good level, because guys, if you sell on this level, remember, even though you got wicks right here, it's a lot of liquidity still right here down the zone. All right. They want to clear out these buys before probably going back up. And if you continue selling, you got a lot of this too. Okay. So that's why I see on gold. Can wait for buys up here. All right. Can wait for sales right here. Take what you see. Anything else, guys? Any more pairs? And if not, I can offer you, I'm gonna give you guys this offer and we can call it a weekend. You cool? Awesome. This video is recorded. I'll give it to Joseph. I'll put it on YouTube. All right. Absolutely. Anytime. So this is the offer. So I have a free Telegram group. So if you guys want to join the free Telegram group, it's cool. The only thing about the free Telegram group is I give out free webinars, free Zooms, free analysis, but I limit it from time to time because of the simple fact is my students get everything. You know, they even get some of the one-on-ones. If I have time to train them one-on-one, I say, hey, let's schedule the Zoom one-on-one. Boom, we get to it, okay? So, hold on 1 second, guys. So what we can do is after this month, I'm going to be doing, and I might extend it. It all depends. $50 a month for the program. However, what I'm doing is I'm offering special deal, $100 for a lifetime for the whole program, which means you just pay $100 for one-time payment. You don't ever have to pay a bill again. You don't have to pay anything monthly. You're in my groups. You get all the signals, all that stuff, lifetime. And it's $100. So if any of you guys are interested in joining the mentorship program, I would love to have you guys. Feel free to come on board. I would love to know what sessions you trade. Matter of fact, go ahead and type in the chat what sessions you trade. New York session, even Asian session, or London session, Sydney session. What's your sessions? Anybody have a session? Stand by. All right, cool. Well, anyways, guys, so if you guys are interested, you can DM me. You could hit London in New York. Yeah, I know you love London. London, man, London hasn't been really doing much lately. It's done some stuff, but I love New York because it just gives me that particular volatility at the time. Pre New York is when I usually start trading. I usually wake up 2 hours before New York starts, and or 1 hour before New York starts, and I just get it cracking. London, I do wake up for London session at time to time as well. Usually London session is probably Tuesdays and Thursdays, and depending on like the news and everything. It's just New York is clean. London is clean. New York, it just gives you that, I don't know, it just gives me moods that I love. So like I said, if you guys are interested in joining the mentorship program, it's just right now, I got the special deal for a limited time, only $100 for a lifetime, no monthly payment, straight up. Get the Telegram group, get all the signals, analysis, weekly, daily webinars, all that stuff. So if you're interested, I will send, you can DM me personally. Joe can send you my DMs. Or you can actually, I'll send the link to Joe, and Joe could give you guys the link. And if you guys buy and you have trouble accessing the Telegram group, just let me know, and I'll give Joe that Telegram group. We lucky during daytime we got both sessions open. I know. Facts, man, facts. All right. So if you're interested, like I say, you can DM me, Jonah Green, Jonah here. Some of you guys. Right there. That's my name. Telegram chat, or just let Joe know. Joe will say, "Hey, I got some students who are interested." Fine, I'll give the link to Joe, and everything will go from there. All right, so that's it, guys. This went a lot longer than usual, but hey, it was a good session. I hope everybody have a wonderful weekend. Does anybody have any last requests? Any last things you want to say? Going once. Anytime, Joe. You know I got you, bro. I thank you, man. Appreciate you, man. All right. Well, y'all have a great weekend, and I'll talk to you guys soon.